So trading basics, we'll be looking at why learn to trade, why trade or follow investment advice, looking at the analogy of Bitcoin. Now, I'll use Bitcoin because I've had some real life scenarios with Bitcoin from people making queries who are actually trading either cryptocurrencies or Bitcoin itself. So we'll be looking at investment advice versus just a reminder from my stream there, versus trading. And is it better to look at buy and hold, or to look at intraday trading? So over the series of videos we'll be looking at those options. Mathematical logic of trading, breaking down into practical aspects. Strategy and edge, giving you structure to trade. So what we'll be looking at with those 2 points is the psychological approach to trading, which is very important if you want to be successful. What is a strategy or edge, and why do you actually need one? And when you have one, why do people fail to implement it? So you have to take a strategy or what gives you that edge in the market, and then apply it in a way that can help you make money. And so many people fail at this. So looking at why do people fail. Technical knowledge, knowing when not to trade as well. So one thing about the markets is, you may think something's going in a particular way, and you've got to have an understanding is when do you actually sit back and sit on your hands and not trade, and why would you not trade if you think something is going your way. Talking about the discipline of trading and the aspirations that lead you to trade. What is it that you want to achieve through trading? And this is an important aspect of trading in terms of maintaining your motivation. What is it that you're looking for? So why do people trade? So each person will have their own aspirations. To get rich, to pay for holidays, have spare cash, independent of work perhaps, financial security, independence, saving for retirement, a pension plan, to pay for schooling perhaps. I mean, there'll be a multitude of reasons as to why you may want to trade. A lot of people will just trade to go on holiday every year, not to come out of their everyday earnings. So one thing you have to think about when you enter trading is, why are you actually wanting to do it? What is your goal? Is it to get rich? Do you just simply want some spare cash? Are you looking for extra retirement money? Do you need more money to help your kids through school? There can be so many reasons. To pay maintenance. But that will be particular to the individual concerned. Now when you're trading, your mindset is important, and you have to look at what's motivating you. So if you're after money, it's important to get that into perspective. And what I'll put to you is that you need to be looking at percentile gain and not monetary gain. How do people make money in real life? where they lend money. You get money lenders, credit cards. You might get, some will have lots of thousands of percent APR. Others, high street banks will have anything between 12% to 29.9%. Some of the advertising on telly will have much higher. Not quite sure how they get away with advertising some of the percentages they're lending money on, but there you go. So percentile gain, not monetary gain. So let's take a look at that a little bit further. If you have money in the bank, you'll get a few percent a year. So would you be happy making as much as a higher value money lender, say 29.9% APR? Well, that's actually a good rate of return. I think Warren Buffett only kind of, in his good days, only made about 20%, but that's 20% of, a lot of money. And that's the difference. 1% of £100 is £1. 1% of 100,000 is 1,000. So there's difference in percentile gain based on the amount of capital you have. If you risk only 1% per trade and make only one trade per week, you make 52% a year. If you get 2 trades on average a week, you make 104% a year. Now that's actually a phenomenal gain if you think about it. 104% a year for making 2 trades on average profit at 1% gain per trade. And bear in mind, when you trade, you can get 2% in a single trade, sometimes more, 5, 6%, if you leave trades run. And I'm sure everybody's heard of the saying, cut your losses short and let your profits run. There's a reason for that. So why do people try to enter multiple trades per day and then end up losing money? Anyone watching this may be in a position where they're actually doing that, and it's difficult to trade and not get caught up in wanting to make money. And even successful traders, all the ones I've met anyway, who are retail traders, and these are people who have started later out in life, I've always said that learning to trade has been the hardest thing that they've ever had to do. But we're talking about successful traders here, mind. And the reason for that is the emotions that we experience when we are trading. In all trading literature, you will hear or read about fear and greed, and probably don't really understand what it's about, but have some acknowledgement of what fear and greed is. And you may have some superficial understanding of how you might be influenced or not influenced by that. To be in the top 20% or so, or less actually, of successful traders, because it varies depending on broker. Some people will quote, or some brokers will quote, 90% fail in trading, in retail trading, others 70% and so forth. So to be in the small percentage of successful traders, all you need really is an understanding of strategy, some patience, along with some time to focus when at the charts, without interruption, to only look at standout setups and scrap everything else, even if you think it may go your way. It's better to be out of a good trade than into a bad one. So if you're looking to build wealth, no matter what it's for, whether it be to pay for a holiday or pay for schooling or build your retirement fund. And is it possible to build your retirement fund from trading? Well, yes, it is. With the correct guidance and training to do that. So let's just say you have 2,000 starting capital. Not a, I mean, it might be a lot of money if you haven't got it. It might be £500 that you can afford, or it might be 1,000. But just using £2,000 as a representative figure, after 1 year, if you double your money, 100%, and bear in mind 100% is just 2 trades a week, taking a 1-to-1 profit. And so you can make more than that, but just keep it simple. 2 trades a week, making a 1-to-1 profit as an average gain. So you might make 2 trades successfully and do a 3rd trade and lose that, and then do a 4th trade, and then you're up 2%. So that can be done in 2 trades, or it might be done in 4 trades, but 2%, 2 trades at 1-to-1 on average. Then year 1 is £4,000. Year 2, 8,000, and so on, all the way up to year 5. You've got 64,000, and then that doubles up to 120,000, 240,000, and so forth. Year 9, 960,000, and year 10, 1,920,000. So in 10 years, doing 2 trades a week and just snapping off a 1-to-1, which is usually a pretty quick trade, to be honest with you. In 10 years, 1,920,000, starting off with £2,000. So you ask yourself, why isn't everybody doing this? Some people are, but it's not easy to do because of what we experience as individuals, and what other factors are there. There's, you might need to take some money out, so you won't necessarily have all that money at the end of the day, or you might have a crisis where you have to pay for something. There's all sorts of reasons as to what might interfere with the plan, but the main reason is what we do when we're at the screens. So why do people fail to implement this? Now, before I carry on, I will be looking at live charts reasonably soon, and we'll be looking at that in relation to buy and hold versus intraday trading. But before that, why do people fail to implement a simple strategy and just be able to stop at a couple of trades profit a week and actually build the capital up? So 100% a year, 2,000, 1,920,000. Now if you were to have just half of that, so only 1 trade, 50 odd % a year, in 10 years you have 115,330. That's just one 1-to-1 trade each week. Just 1 trade at 1-to-1. Snap it off, the rest of the week is off. So if you do that on a Monday morning, that's it for the week. And in 10 years you can have £115,000 or so. I'd say that's not too bad. When you consider what you pay into a pension fund, now for those of you who don't know, in order to get 2/3 of your final wage with pension, you need to pay in 20% of your wages every month for 40 years. 40 years. And we do this without flinching. Nowadays you have nest pensions, don't you? And well, it's not really a pension, to be honest with you. It's just government taking money off you, and you're meant to contribute a little bit yourself. I think some people are just saving 2%. You will not get a reasonable percentage return for pension putting in 2% a month. It won't happen. But people don't look that far ahead. But I think the people watching this will be looking far ahead, because they want, I should imagine you want, some kind of financial security. So even half of 100%, 50% a year, in 20 years, that comes up to 6,650,508. Now that's, I've actually taken a pension. It didn't accrue to that, I can tell you. So that's a phenomenal gain. It really is. And all you have to do for that is trade one successful trade a week for 20 years. One trade, have the rest of the time off, and you have 6,650,000 at the end of it. Why can't people do this? Well, yes, it's because of emotions and self-opinionation. It's the bottom line. People can become arrogant, and we want this is I'll include myself in that. And as most successful traders have stated, as I've already said, learning to trade is one of the most difficult things you'll ever do. I don't know anybody who hasn't said that, who is successful. So why people fail? Not persevering with a successful strategy. So you know a strategy work, it's been proven, and you don't persevere with that. You don't try to work at it and get it right. You may think you understand it, but then you think, okay, well, I'm not getting enough trades, let me have a look at this video on YouTube, or whatever. Or let me have a look at this strategy, that should be interesting. Constantly searching for new strategies when not mastered the ones known. And this leads to mental clutter, a lack of clarity of process to follow. Now if you think about it, if you went to an employer and you said, okay, I'd like to do this job, and he says, okay, well, in order for you to get your weekly wage, what I want you to do is follow this process. So he wants you to sit down at the screen, he or she wants you to sit down at the screen and have a tick box of things that you need to look for on the chart. And all you have to do is tick them, and then when they're all ticked, or most of them are ticked, you'll enter a trade. All you have to do is follow that process. Right? If you start wandering off doing other stuff, you're going to get the sack. Right? Why would he sack you? Because you're not doing your job. Right? And trading is a job of work. Right? If you know something makes you money, why on earth are you doing something else? If you're doing it and it's not making you money, but you know the process works for someone else, then you have to look at what you're doing wrong. It's a learning curve. And if you don't try to follow that learning curve, you will not succeed at any strategy at all. That's assuming that the strategy works. Some strategies won't work in particular markets, but predominantly there are strategies out there that are successful throughout time, irrespective of market conditions and in any market. And if you fail to follow those, the reason you fail isn't the strategy normally, it's because you haven't learned to implement it properly. And if you can't learn to implement one strategy properly, what makes you think you can enter into another strategy and do that one properly? It's very unlikely. And you wouldn't do that if you were employed by somebody. So why, if it's within your own time and employment, are you doing that? Is the question to ask. Failing to keep things simple to aid implementation, because the brain can only cope with so much processing power. What you see visually is being processed by your brain. If you've got too much information, then it's got too much to process, and it's going to make decisions difficult. It's going to cloud your judgment. So as I said, looking for too much when at the screen is leading to a lack of focus on any one thing. This is what happens. You sit down and you've got so much on your head. You think, oh, well, head and shoulders there, or I've got some support resistance here. Oh, look, there's a bullish candle there in the zone or whatever. And there's so many charts to look from. What do you focus on? Where do you start? How do you know that's the candle to take? How do you know if that breaks that it's likely to be going your way? The fact that it's simply a support level or resistance level doesn't mean that there's other indications that it's going to succeed if it breaks. But what do you need to look for? You get impatience leading to impulsive actions when at the screen. Or wanting to trade. Maybe you haven't had a trade all week and you just want to put something on. You enjoy trading. It's nice to see a bit of profit on the screen. And you want to trade. You can end up just pressing the button for the hell of it, Oh, well, that looks like it's going that way. Let me just try it. What the hell, It's only one trade. And clicking the button. Being impatient. And failure to get guidance or mentoring in order to learn. That just leads to uninformed learning. Now, you're not born able to walk, In all other walks of life, you'll go into some learning. You'll do a course in something. If you become a plumber or an electrician or whatever it is that you do in life, if you go to university to learn something, you'll go on a course in order to learn. So why do people think they can look at something on YouTube or on the computer or read a book and know everything they need to know about trading in order to be successful? All of a sudden, you're not born with the ability to know something. To a sense, we're a product of our experiences, and we have to learn through repetition and guidance. And if you don't embrace that, you'll fail at anything at all. We're all birds in a cage to an extent, and we need support. We need something to help push us in the direction for us to be able to see outside of our own insularity, our own way of looking at things sometimes. And why would people think that trading is anything different? So ego getting in the way, a general lack of self-awareness is perhaps an issue. So looking at intraday trading versus trade and hold. Now here's the Bitcoin analogy. So I will move to live charts, but I just want to show this. This is Bitcoin as it is. I took this screenshot today, actually. Today is 10th of December 2020, for a historical note. Now, you see these dots here. I noted these at the time, yeah. And there was a chap in work who was trading Bitcoin. And I think he bought up here somewhere, up here. And he was now down towards the bottom of the triangle. And I said to him, okay, well, you're very bearish here. It's essentially a breakout pattern there. You've got three touches and lower and highs, basically a triangle. And if this line breaks, it's very likely going south. Yes. I said, if it comes here, you want to be out of the trade. No, he came all the way down here. Now, buy and hold, okay, fair enough. But there's a few people who traded Bitcoin when I was at work, and somebody's mother was telling me that their son had bought down here somewhere. It was where when Bitcoin was very low, and he had profits all the way up here. Yeah, he never took them out. Why are you trading if you're not going to take your profits? I mean, dear God. It's because he didn't understand the process of trading. Yeah, he got lucky to have money all the way up here, and then he was all the way down here, and he was just hanging on in the hope that it will reach that high again. Well, Bitcoin has reached that high, but that could also have come down and crashed completely. You don't know that. You can't predict what the market's going to do. And one of the things with Bitcoin is that it's industry led. There are so many companies out there selling to the average Joe things like Bitcoin, or they'll tell you that we'll double your money, we'll give you a personal advisor, and then these people get trapped into losing their money basically. And I've met a few people in real life who've experienced this, and each one has ignored my advice and gone on to lose money. So the point is, the difference between buy and hold and intraday trading is that you make money more safely with intraday trading or technical trading. I would say intraday because this is a weekly chart, by the way. So this is many, many weeks. This is a few years back. But here you have trading setups. Certainly here you have a definite setup there. At this point, if you're intraday trading, you're looking for bearish setups on lower time frames. But you could also just trade the weekly candles if you've got enough money to do that. And so why invest things like all your capital in one market? So you've got £10,000, whatever, or you've got your £2,000 and you slap it into Bitcoin, all of a sudden you've got hardly anything. What do you do at that point? Well, bear in mind it's taken about 3 years to get back up to the highs. Yeah. So you've had 3 years of sitting on your laurel, having a bit of profit, coming back down again, losing it all again, because it's come right back down to the lows again, and now it's been spiking up. And anything can happen, because today, I think it was, or yesterday, I had an email through saying that retail traders have been stopped from trading Bitcoin. And the reason for that is that so many people, the FCA say, are losing so much money. Phenomenal amounts of money being lost for the retail traders. Professional traders can carry on, but the retail traders, not so much. They're actually being physically stopped by the brokers to trade it because it's deemed by the FCA guidance to be too risky. And even when you're in a trade, they can put the breakers on. I mean, look at this drop here in 1 week. If the breakers came on, you wouldn't be able to bail out. You'd just be stuck and losing money, and you wouldn't be trading again until they allowed you to trade. That's a very precarious position to be in. But the reason we learn the technical trade is so that we can look at market, we can look at this and know what way do we want to be trading here. Well, I would say if that's a technical picture for a bearish setup, then on the lower time frames I'm going to be looking for bearish trades. Now what happens with the buy and hold investor who doesn't really understand what they're doing? They've lost their money, all of a sudden they get so excited here, and all of a sudden they're getting rich again. And this is what was being experienced by this guy I knew in work. He was so ecstatic. There's rumours of it going back up to 20 or whatever. And I'm saying to him, yeah, but that's just a pullback in a bearish market. Hello. And then of course he came all the way down here. So, but why wasn't he making money on this pullback and making money down here? Well, why wasn't he coming in out of the market and making money all over the place? He could have been, but basically a few years before it's come up, and that's only because people would have been lucky if they held on to it. It wouldn't necessarily go that way. And even more recently, so you've got an area here that was potential buy, short in the market here, more of a setup there. And this is what we do with intraday trading: is we look at the weekly chart and say, okay, what's going on here, and am I looking for a particular direction in this market? And bear in mind that these potential setups here, this is a weekly candle. That's an entire week. So from there to here is many, many months. Now, if you're watching that every week, you're going to get bored. It's a very monotonous process, trading. And this is what people don't understand. You need a lot of patience, and you have to keep in mind the mathematical logic of trading and how that builds up capital for yourself, and not get carried away with wanting to make £1 million a day. I want that £1 million now, not in 10 years time. Or get real. What business successfully makes £1 million overnight? Unless you're lucky, you might get a boom in something. It can happen, but most of us, we have to plod and slog away at it a little. But it's not that difficult to do. But what simply holds people back are emotions, wanting to make too much too soon, and not keeping in mind the logic of I can go to previous. The logic of the mathematics of trading. Let me go back to the start there. So much getting used to the okay, mathematics of trading. That's at 1%. Okay, just simply one trade a week will, in 20 years, will give you a rather large retirement portfolio. Now that's to be envied by anyone. Let's face it. If you've got that as your retirement portfolio, you've got a better pension than any pension company will ever give you. And that is just making one trade per week. One trade. And having the patience to simply look out for that one trade. And then sitting back. You may find another one that's a standout if you keep at it. So you might get 2 trades a week, or 3 trades, sometimes 5 or 6 trades. Yeah, all well and good. The more the better. But if they're not standard trades, and you end up just trading because you think, it may go your way, you're taking so-so trades, then you're going to start to lose money. And the reason people fail is because they do this. They then become emotional because the emotions start to kick in, and things start to get flooded. And then you lose objectivity, and that's what tends to happen. So that's your basics of psychology with trading. Okay, and this is the Bitcoin is it has a little high spread on the lower time frames, but I'm sure I've got it here somewhere. And this is also an updated platform for me, so it's I've known people to get in down here. Well, it was somebody's son. I was talking to the mother. Made all this money up here and still hadn't taken any profit down here, because you may think they're stupid, but they don't understand trading, and you'd be surprised just how many people do not understand trading. They do not understand what they should be doing. They just have this notion that you can make a lot of money, and they make a lot of money sometimes and then lose it all because they don't even know when to take it out. And that's what learning to trade is about. When do you enter? Why do you enter there? Why do you take your profits there? Yeah, and you have to take into account that mathematical logic. Now this is Bitcoin on the weekly chart. And why do you think the FCA have said at this point, at this resistance level here, we don't want retail traders trading this? Yeah. Yeah, because what's given Bitcoin this promotion, if you like, this boost, are people being sold by companies and various other, I won't call them traders, but various other people within the industry, that Bitcoin is such a marvelous thing to buy, and they have entire seminars or webinars and convincing people to get in and trade Bitcoin. Yeah, so it becomes a little bit more self-fulfilling, which is why they do it. They want Bitcoin to rise. They're putting money themselves in, so they want to get as many people to do the same thing. Right? They're basically conning people out of their money. Yeah, they don't care if you lose money. And I've advised people, come out here, get in when it's lower down, or there's one person who was asking me about learning to trade. She didn't want to pay for it, and they went on to lose their 10 grand savings to some shark company on the internet. They didn't get a life, really. You can't enter trading without learning to trade. It's just not possible. You don't become a plumber if you haven't gone on a course to learn plumbing, do you? I mean, you have to do at some point some learning, and don't think that trading is any different either. That's simply what you have to do. So in trading the markets, what you're looking for is you need some kind of strategy, what they refer to as an edge. So I mean, that's just sort of generic talking, using the term edge. But you need some kind of logical approach to tell you when you need to enter. Now that chart may look complicated to some people. Some of you may think, oh no, I understand that pretty well. But a lot of people new to trade and look at that and say, I don't understand that what that is. How the hell am I meant to know what to do there? But it's very simple to understand trading. Very, very simple. What gets in the way are emotions. The inability to be able to, once you've got that one trade, to refrain from taking so-so trades after that point. Because at that point you're just impatient and you want to see more money in the bank. It takes a lot of grit to sit down and say, no, I'm going to sit on my hands. Next week I'm just going to come back to the screens till I've got that 1% again, or that 2%, whatever. Yeah. And you will find after a bit of experience trading, then things come more easily. It's easier to roll out a few trades a day. I think I'm not sure how many trades I've had today, but if I go to euro dollar, where I've been some scalping going on, let me see. Oh, I haven't got it there. I've had a couple of days trades on euro dollar today. Why isn't it there? Oh, it's in the settings there. Let me have a look. Today trades. Okay. So, okay, yeah, I've had 2 successful trades in euro dollar today. Okay, that's not too bad. I mean, some people, when you look on the internet, when you look at YouTube videos, yeah, they're doing 40, 50 trades a day. Wow, Well, to get at that level, you have to be doing a lot wrong, really. You can make money quickly in trading when you get up to a certain level. But they're also talking about a lot of losses, and then having made a lot of gains, a lot of losses, and maybe breaking even at a £100 profit or something, or maybe £100 loss. Do you really want to be risking your money that much? Not for me. I'm one of those people that thinks trading should be stress-free. I don't like stress. I don't know. Anybody like stress? I don't. So for me, I want an easy lifestyle, and I don't want to be experiencing stress when I come to the screens. I want to be relaxing and looking at the setup and saying, actually, no, this is where I want to be trading, and then doing a trade and just making some steady profits for myself. I don't want to be doing 50 trades a day, in and out all the time. I could be. I might might do trades on other charts as well. But you're not really, if you want to make money, especially when you're learning, you don't want to be making lots and lots of trades. You want to be waiting for the good setups, keeping in mind that what you're looking for is an understanding of the process, an understanding of the technical aspects of trading, which is very easy to understand. It becomes difficult and people fail at it because of emotional influences, greed. Well, maybe that's too emotive a term, greed. It's about you want to make more money. You know, if I make £200, why don't I make £1,000 or £2,000? Or I can, and this is what people do as well. They well, if I can do that with £200, I can afford to risk £1,000 a time. So they'll risk £1,000. They may make £1,000, but then they'll get greedy and eventually they lose it all. You know, so you have to be consistent. You have to risk the same amount each time and be consistent in your approach, and not get greedy, not want to risk too much of your profit. So you don't have to put on 50% or 100% of your money in trading. If you risk 10%, you make 10 trades, and you know, most of them are wrong. You've lost a lot of money, your capital, and one thing you have to keep in mind with trading is protecting your capital. You don't want to be losing large amounts of capital. 1%, you'd have to get 100 trades wrong to lose all your capital in trading at 1% risk. And that 1% risk, doing just one trade a week, can make you 6 million plus in 20 years, which is more than any retirement fund. And we pay all our lives into retirement funds, but we can't grasp the concept of doing something very simple to give us a very strong retirement portfolio. You need to just sit back, relax, and think about that really. Why is it that people can't do it? It is difficult to do. That's all you have to do is one trade per week. And in 20 years, if you're starting out sort of thing, you'll be retiring early. If you start out when you're 20, you'll be retired at 40. If you're 30, you'll be retired at 50. Well, you'll probably be retired before that actually. You might be retired after after 10 years, wanting to make more time and money from trading. But the point is, you could just carry on with your normal life, do one trade a week, and in 20 years, so if you're, let's just say on average, if you're 40, if you start at the age of 40, by the time you're 60, which is an average retirement age, over 6.5 million in your bank account. I mean, if you can't grasp that, I mean, there's something amiss there. I mean, you really don't need to be excessively trading 50 trades a day or half a dozen trades a day, because those people lose money. All you need to do is make one trade a day. Can't emphasize that enough. Sorry, one trade a week, not a day. Well, one trade a day is good, because that's what then? That's 5% a week. 5% a week. 200 and what's that? 260% in a year, doing one trade a day. Yeah, successfully. You know, you may find that you have to do a few trades to get that 1% up, but the point is, you may get a few percent in one trade as well, if you let your profits run. You know, and that's about learning strategies and approaches and how do you manage trades when you're in them and so forth, in order to optimize the money that you get out of them. Yeah. So that's not being covered here. This is basic introduction into the psychology of trading. What is it that makes people fail? And it's basically ego, emotions, wanting to make too much too soon, not being able to formulate in your own mind the logic of longer term wealth building. Yeah. How many people do you know will have a pension fund of over £6.5 million in 20 years' time. Right? Now, unless you come from a wealthy environment, the average Joe will know nobody. Okay? Like that. You know, perhaps if you come from a more affluent family, yes, you know, easily. This is just starting off. Mine with a £2,000 account. Right? You'll spend more than that on a car or insurance in a year, probably. You know, you probably spend that on takeaways, Chinese on a Friday night or something. You know, or on beer, whatever. You know, actually starting off with £2,000 is not a lot of capital risk, is it? You know, but what you need to do is know how to use it. So there's a bit of sort of capital outlay probably for tuition and so forth. But if you went to university, you'd be forking out probably about 30 grand, you know, or more on tuition fees in over 3 years. And you expect to go into trading, spending no money at all, and make millions of pounds, or any educational training, refusing to spend anything on tuition or training, which is simply illogical. I don't know why people do that. Even I have forked out money on some mentoring and training because you find that it's required. It's as simple as that. You have to have guidance from somebody who knows what they're doing. So anyway, that's it for today, I think. I'm going to review how the video has taken, because this is the first stream that I've actually done. So, and I'm going to review how it is. So try and grasp those issues. That is why people fail, and this has been my experience. But there's a lot of literature out there, whether you listen to it on an audiobook or whether you go out and read it. All these issues are reiterated time and time again within literature from people experienced in the field. And if you want to enter into a life of trading, it doesn't have to take over your life. You know, let's say it can do, but generally trading should fit around your lifestyle, not your lifestyle around trading. And that's something to remember. To have a healthy retirement and to have healthy funds throughout the years, all you really need is more capital. And what you look to do with trading is build that capital up, so you get to a point where you can make a regular income from not spending too much time at the charts, actually. And by the time you get to that point, you'll know when to trade, you'll be knowing what to look for. And that's the art of trading, and you have to keep that in mind. So if you haven't got wealth, you don't need too much to build up enough in order to be able to make some money at it. And then once you're at that level, you look at your life goals and what you want out of trading, and how much you want to invest in sort of retirement portfolios and so forth. Is that your main reason for trading? Do you want to use it for living your life? And maybe use some of it for things like retirement investing. Perhaps taking the 2,000, if you've got more than £2,000, yeah, then you can maybe put 2,000 one account for your retirement portfolio, and then use another account for intraday trading or other or buy and hold, whatever it is that you want to do. Even with buy and hold, you have to understand the technicals and know when to enter, when to get out. Okay, so that's some of the basics. I hope that helps, and I'll be doing a video each week. If you've got any questions, simply ask during the sessions, but it's early days, so I don't expect many, if any, attendees until things start rolling out, but hopefully if you're watching this in the future, you'll have found some benefit from it. And you can always get in touch if you want some guidance on that. Okay, so you take care, and hope it all helps.